All right. We are back today for our second real estate forum. This is our April forum to talk about the spring market, and we have four professionals from the industry. Let's go down the line. We'll start all the way furthest from you. We have Melanie from State Farm. Good morning.
Good morning.
We have Chris from Chicago Title.
Good morning, guys.
We have John Hazelet from Hazelet Realty Group.
Good morning.
And we have Abdel from Got Mortgages. So, all right, let's get right into it. The market is still a little weird, tricky. Abdel, I follow all your posts, so I learn a lot, and I also from the Hazelet Realty Group, I also watch a lot of JT's posts. So I kind of been watching what's going on. So from the mortgage standpoint, where do you see the market? Where do you see the spring market in the Monmouth and Ocean County area?
I mean, listen, it's been red hot, right, for the last 3-4 years. It's only ramped up even further. There was never a seasonal basis of this business during COVID and post-COVID, right? Usually they say like winter gets a little quiet, spring, summer gets busy. We didn't really see that for like 2-3 years. I think this year, 2024, is probably the first year where winter kind of came in a little quiet. And then now it's ramping up. I mean, I'm seeing a lot more listings start to come on the market. Interest rates are fighting themselves for the last 5 months, anywhere from 6.5 to 7.25. And they're going down 1 week, going up 1 week, depending on what data point comes out with inflation and employment and stuff.
And we're expecting a rate cut in June.
So the Fed came out and they announced, they were a little premature, right, when they announced in December that they were going to cut, because that's when rates sharply dropped. And then less than a couple weeks later, we got some new inflation data, and then we basically reversed everything. Now, the last meeting that they had in March, they did confirm there's going to be 3 cuts.
Okay.
From a worst case scenario, right, the last 3 Fed meetings start September, basically September, then into December. So that's a worst case scenario. Now, they could change their stance, right? Tomorrow is going to be a big day with we have the BLS report, which is the weekly reports that come out. And if it comes in where unemployment is high, then I think rates will slowly start to transition down, right? Because the Fed's job is to mandate the economy staying healthy, but at the same time, people don't lose too many jobs. Because once unemployment gets out of whack, then they are afraid of that scary R word, right, with the recession. But people are buying, man. People are buying. Monmouth Ocean is probably one of the hottest areas there is. Inventory is tight, which I'm sure Mr. Hazelet can comment on that.
John, so what's the inventory look like right now?
Inventory is still a little tight. I mean, it has been for a while. We were still, again, 2, 3, 4 years ago, a house would come on the market, and by the weekend you'd have 4 or 5 offers.
So is that still happening?
A little bit, yeah. So it's calmed down a little.
Okay.
But here, I mean, again, 3, 4 years ago, there were times we had more than 20 offers on a home. So that's calmed down just a little bit. If it's priced correctly, you're still getting multiple offers.
I thought I was just special when you sold my home in 4 hours. I always just thought, I always give you the credit. I never gave it to the market. I never knew about this, 20 offers. When you sold my brick house in 4 hours, I thought you were just a rock star.
Well, I always say, Tom, it's never the market, it's the marketing, right? Yeah. So everything you do with pricing a home has to do with the market, right? So to me, list price is nothing more than a marketing tool. You guys were very good on listening on what we should list it for, and we did pretty well.
Yep.
So,
yeah, he brings a good point too. I don't want to mess up the mojo, but
you're in now.
I'm seeing a lot of price cuts.
Okay.
So when he talks about pricing a home, right? If it's priced correctly, you're getting multiple offers in a very short time frame. If it's priced too high, I'm seeing a lot more cuts faster than normal.
Sure.
Right.
Okay.
So I always tell the clients, to be cautious of that, and then make sure the agents are doing the comps and the comparables and stuff like that. So
always.
Yeah.
And Chris, what's your read so far on the spring market?
Read so far on the spring market? I feel like it's a damn ready to burst, man. It is ready to go. It's primed. I think we're going into the summer, especially from the title point of view. We're ramping up, getting very busy. We're about 30 to 60 days behind these two. Obviously, when you go buy a house, you're looking.
Yeah, John's got to go first.
Abdel's got to go first. Make sure you got some money.
You got to get pre-approval
and then
from
John's got to
Abdel,
get a place.
And John's got to get you
get the place, and I got to make sure that that's a place that is the one he actually is going to give you, is the one that actually can be sold.
Yep.
And then obviously
It actually is.
It actually is. Yeah. So it's like and with the demand coming up, that's going to be more and more important as it gets red hot again. Right, you have a lot of fixers and flippers out there. You also have a lot of fake fixers and flippers out there. You got a lot of fraud out there. You have a lot of quick claim deeds that are popping around here and there. We make sure it doesn't affect your buyers. Right. At the end of the day,
when you say fake flipper and fixers, kind of elaborate a little bit.
Well, say like a fake fixer and flipper. They kind of like, I don't even know how to explain it without making it very easy to explain. Hopefully, you're editing this out. But no, really, what a fake flipper fixer, say a guy is, there's two people on the team, right? And they form an LLC. And the one guy sells the property, the other guy has no idea what's going on. And then mid-flip, fixer, flip, or something like that. So this guy
that happens,
yeah. Or they split, right? And the one guy, the LLC is still there. You can still sell the property, right? One guy's gone, the other guy's still there.
Wow.
And then you have a lot of contingencies. It's almost like a divorce.
Yep.
But it's a divorce. And I'll say.
So you're clearing all that title before, so that they have the clear to close.
Yeah, stuff that happens in the background should never title should never be visible to your buyer. Right?
Yep.
At the end of the day, title should never be a problem. That's why one of the reasons why no one knows what title does. That's a good thing. That means title's doing its job. If you never know who I am, other than maybe the guy at the closing table with you, that's great. That means there's, and if there's never a knock on your door 3 months down the road, 4 months down the road about a deed or something like that, that means we did our job correctly. That's what we're looking for right there.
So, from a title perspective, kind of, as you said, no one's supposed to know who you are. But what's the role of title in a quick to this process? Again, as the spring market heats up and people, you have a lot of first-time buyers. They were talking about on the first podcast about how many buyers in Monmouth and Ocean County are first-time buyers. So I'd love to hear a little more perspective. Christine was telling us jokes and talking about everything else, but give us the rundown of what they're looking for when John brings a buyer to the table and Abdel gets them set up. Where you're coming to the process. So what is the job of the title? And what does it do?
Title's got a couple of different jobs. I'm probably not as funny as Christine is about this, but no one is. But we make sure that, like I said, we make sure that the transaction just goes smooth at the end of the day. So these guys are depending on 5-star reviews, right? My job is, I love a 5-star review, just like everybody else would, but I don't necessarily need it to have my job, right? That 5-star review sometimes relies on how smooth that closing is at the table, right? Either at the table itself or getting to the table, right? And we all know those little things that can pop up, like, an inspection issue might pop up, something in the background of a mortgage might pop up, something in the background of the chain of command of ownership might pop up, and we make sure that, if you want, I can kind of tell an anecdote, we'd have one person that died while they were selling the property, they owed money to the casino. Guess who showed up at the closing? The casino.
No way.
Yeah, exactly. So I got a guy looking right out of Goodfellas. Sure. Straight suit and everything like that. And he's like, it behooves you to pay us, our money. I was like, heck yeah, I'm paying your money. Get the heck out of here. But yeah,
let me write that check first to get you out of here.
But a good title company will do a rundown the morning of, right? And that title company was great at what they did, and I loved my time with them. I love my time with these guys now. That's why I am where I am. Good title companies will do those rundowns the morning of and make sure that there's nothing out there. And God forbid that guy came 2 weeks later to your buyer. Holy cow, that would be a whole different story. They probably pass out.
That would be a weird conversation if someone showed up at the house a couple of weeks later.
You got a good fellow in the front of your house, and you're like, I don't know what happened. Especially up north. It gets a little more crazy.
Definitely. Yeah. Wow. All right. So your job is to make everything smooth behind the scenes.
Yes. And support these guys too, right?
Yep.
And support means whether it's just making sure that transaction goes well, or support in the background is also, hey, let's help you out. Let's build your business, because your business is our business. We're building it all together. That's why you see us so many times we'll work in teams together. And and it really is way. I'm a phone call away from all my clients. You need something, call me tomorrow. If it's something as stupid as let me help you sponsor an event. If it's something as big as give me that $1 million guy, that kind of stuff. That's what we can do.
That's why you go to all those networking events.
Never stop, man. Networking never stops, man. It does not stop at all.
Awesome. Melanie, how are you today? You had the boys. The boys are taking over. So let's go to girl power now. So
yeah. So as to insurance, I mean, we speak to a lot of new home buyers still. I mean, and I always have to ask, like with the industry, I'm like, okay, so let me know, how many times have you shopped now? And they tell me their crazy stories of bidding wars, and this is their 5th home that they're now trying to put an offer on, and they're finally getting catch. Yeah. And I think that really is slowing down because I'm getting less and less of those stories. I mean, last year, every single person that we spoke to that was new home buyers had filed this. And now it's like, maybe 2 or 3 homes that they went through, but it's slowing down, so which is good news. What we're hearing from a lot, and I'm sure you guys get this a lot too on your end, is first-time home buyers, when it comes to insurance at least, they don't know the difference between a replacement cost value and their mortgage value. And we have to really educate, and especially with the spike that there was last year, so many people were buying way over value of the home, and then they would come to us and they're like, really? That's all the replacement cost value is of insurance? It's less than what my mortgage is?
Wow.
And I'm like, yeah, because if your house were to burn down, guess what? Insurance is only going to build the house. It's not going to rebuild any of the land around it. Or we don't care about what the resale value is and, what that happens. It's just about the actual structure of the house. So we really try to educate our first-time home buyers about that because they're clueless when it comes to it, because all they do hear on this side is, the mortgage price, the costs, the flipping, and all of that. But they don't really know about the actual true replacement cost value of a house and what that means in that worst case scenario that your house goes on fire.
Now, from an appraisal point of view, how are these appraisals going off? If replacement costs, like if they're overbidding that, how are they getting that appraisal to appraise?
So when we have appraisals, right, there's 3 different types of appraisals. There's a sales comparison approach, which is what 99% of appraisals are based off of. Similar areas with square footage, bedrooms, bathrooms, location, update, not update, and that's what we go off, right? Then there's the cost approach, right? Which is, let's say there's not as many houses and it's super unique. They would go off of what it would cost to build that house from scratch, right? And then there's an income approach. So if you have a multifamily home or a commercial property, they're going based off of the cash flow, and they're going based off of what it could potentially rent for, and stuff like that. But we've seen from our end so many different insurance issues, right? And insurance companies are becoming a little bit more, a little bit more stringent, right, in regards to some of their restrictions comparative to before. Before we would go and ask for an insurance quote, like after the loan was approved, right? Now we're doing it the second the offer is getting accepted, because they have to go through the process, and then you guys are sending inspectors now. From what I hear, a lot of insurance companies are sending inspectors during the process, when previously usually they would send an inspector if they had to after, right, to assess. So that's been, and we keep our clients, on a single family home, I used to quote anywhere from like $75 to $100, right, depending on the price point. Now I'm quoting $150 to $175 because the cost has gone up as well. And then if it comes in lower, great. A month, correct.
Per month. So when they're thinking about that overall, you're giving them the overall monthly breakdown of what your monthly all-in is.
Yeah. I've had to increase it. Listen, if we get it lower, we get it lower. But I'd rather set the expectations high and then retreat backwards. And then flood insurance too. Right? That's been a disaster with that stuff.
And especially talking about this area, I mean, unfortunately, it's going to get worse as climate change gets worse. That's what it's based off of. How much are we getting as to hurricanes, wind and hail? I mean, think about April showers. It's been crazy already.
Yeah.
With the wind, and that's just happening more and more. And
these storms are more powerful.
Right, they're more powerful. The more we, not to get too much into the environment, but the more we knock down trees, the more windy it's going to be.
Sure.
And that's just going to hike up the price of insurance when it comes to especially homeowners insurance, because more wind means more claims.
Yeah. in areas we never used to think of, talking like transitioning a little further up, I guess you could say, like Middlesex County, Union County. I never used to think that the house needed flood insurance, right? So we run obviously always the FEMA map and we'll check the flood zone, and then we run it and there's flood insurance. And I'm like, oh shit. So now we got to go, back to the drawing board to make sure that the estimate on the payment, and some of these insurance costs are like $3, $4, $5,000, depending on what zone you're in. So we have to factor that into it. So we're making sure our realtor partners too, right? They're doing that assessment too when they're showing it, or asking the listing agent, hey, does this have flood insurance? Sometimes they'll put it in the MLS descriptions. They should.
They should put it in the MLS, right, John?
Good agent does that.
Yep. Your team always does that.
Always.
They don't.
They hear about it.
Totally. You do a lot. I mean, where you are, Rick, I mean, you're doing a lot of stuff where there's flood insurance involved.
Most waterfront homes in the state of New Jersey are in Bricktown. So,
Yep.
So yeah, we've been seeing that. I mean, forever. So, nothing new to us.
Yep. And the flood just came out with a new ruling on how the flood paperwork works and how you have that disclaimer form. I learned about that in our podcast, Real Estate Podcast 1. I was educated on that. I know more about that, how that works now, thanks to Aaron Levine. But he kind of told us about the new ruling. That was right around the time of that podcast. So there's a lot more going on. I mean, are you finding that buyers, both of you guys, find that buyers are having a harder time qualifying because of the higher cost of the house, because of the higher cost of the insurance and the higher cost, and the higher rate? I mean, that rate, what does that do if you bring that rate down 0.5% or 1%? How many more people? I know from my education from JT Hazelet, I learned that if the rate goes down X amount, that many more buyers are in the market. So kind of expand on that. Give me both your guys' thoughts on what that does to the market.
I mean, from when rates went from 5s to 7s and they crept up pretty quickly, we lost, I would say, about 5 million buyers in the market, and across the country, nationally, and it became an affordability issue, right? And it's still, to an extent, sometimes an affordability issue, because we go off of debt-to-income ratios. FHA, you can go 56%. Conventional, you can go 49%. So we're going and we're educating our clients along the way where it's like...
So let's just backtrack for a second. Just so because everybody doesn't know this. You talk about it because you talk about it every day. 49% and 56%. So take your gross income. So your W-2 salary for your wife and you, or if you're single, blah, blah, blah. So whatever that number is, 49% of that total gross can be used qualified.
Minus whatever revolving debt is on your credit.
So your car payment, does your rent fall into that? Okay.
Car, credit, cards, minimum payments of your installment notes, minimum payments on credit cards, alimony, child support, IRS.
That's Best Buy card, or Macy's or Target card, that falls into that.
Yeah. So the example I always tell people is like, if you make $10,000 a month, FHA, you can have a total debt of $5,600. Conventional, you can have a total debt of $4,900. So sometimes clients need that extra $700 wiggle room. But I know the agents aren't fans of FHA loans, not to get into it too much, but it's generally because it's money, right? They're both green, as I tell people, but FHA is a little bit more stringent on the appraisal, where they're looking for a little bit like chip paint, cracked window, missing handrail. Conventional appraisals are a little bit more streamlined, where they don't look for that, and that's 99% of the time, right? Why you guys would generally prefer conventional over FHA.
For the most part, we don't discriminate against FHA by no stretch, or VA for that matter. But yeah, chip paint seems to be the main one. Anytime there's chip paint, we know this might be an FHA issue, depending on the appraiser and things of that nature. Yeah, it's a safety hazard. And FHA is looking for safety hazards when they walk through. So this needs a handrail. We had, just a couple months ago, someone had a deck in the backyard with one of the boards that were curled up, and that's a tripping hazard. Yeah. So they had to have someone come and flip the board and screw it down.
Now is it possible to either put money in a holding area, in an escrow account, or have someone come in ahead of time before the transaction to make those chip paints go away, or so that it could happen, so that
When you hire them, yes.
Yes. So again, a listing agent that's walking through the home, here, I sold your house. We did it too. I've been in your house a bunch of times before I went through as your agent, right? Okay. So we walked through and I pointed out a couple things, right? Your house was fine, but in some cases you're walking through and it's like, hey, you got a chip here. Hey, you got this. You might want to watch that. This is a tripping hazard. Like those things, because you don't want to, as a seller, you don't want to rule out anybody that's FHA. You want as many buyers to come through as possible. Sure. So someone who's experienced, that's where experience comes in when it comes to realtors, right? You want someone to be able to walk through and give you some guidance on those things so you can, what I like to call pre-disaster, something like that.
I think, though, that's why you go to a reputable firm that has agents that have been doing this, not just your buddy's friend that just started selling houses and still has one under their belt. When you're looking for a transaction, you use a professional.
Yeah, there's an education that goes into buying a house, there's no question. And just like, we're talking about debts income and things like that, we always say, hey, you can have and I know JT said this on the last podcast, you can have the car in the house, you just have to buy them in a certain, one comes first, one comes next.
JT says buy the house first, then you can get,
very true.
Then you can get the car. You can get the car after. His feeling is that the car dealerships and car finance companies are a lot easier on the restriction than the guys that Abdel is dealing with.
And this is something I feel in our environment that just isn't taught to young people. So like this should be a class in school or somewhere where they learn the effects of credit, right? So to me, that's something that we try to do when we're having our buyer consultations and we have the clients to the office. This is something that we're talking about. So sometimes that happens before they get to a lender. Sometimes it's after, but you always want to make sure you touch on everything.
We can get a nice step and repeat made and put, credit by John Hayes. Credit reporting and credit, how to buy your first house. I love that your grandson, go off on a tangent here, he does his own YouTubes now, and he says how to buy a home with zero money down, which I think is just incredible. That at 5 years old, he's 6 years old, he's telling people how to do it.
And he walks into my office, and I said, this might be your office one day, right? Yeah. He was like, it's my office now, right?
Started out with watching cartoons there, and now he's doing his videos. And but I love it that he has that video of the how to buy a house with zero money down.
Yeah, JT got a lot of hits on that one.
Yeah, I was definitely worthy of it. It was great. So, all right. So then they're coming in. They're educated by John and his crew and professionals like John. They're coming in and they now know kind of where their score is. They know not to go by the portion. Wait till after on that. But so now they can go to 49 or 56% of total $10,000 a month of gross income. Then you have your all those cards and your payments. And then that gets them into the qualification.
The remaining thing after you pay off the stuff is what they qualify on. Right. Now, you mentioned something gross. If you're W-2, it's gross. If you're self-employed, it's net. Don't ask me why. I didn't make up the rules. I just instill them, and I teach them. Right.
They always go after the small business.
So
they get screwed every time.
So it's critical when you're a self-employed business owner and you're planning on buying your taxes. That you're connecting with a mortgage professional to truly strategize as to what you're looking to file. Therefore, you're not running into qualification hurdles after. And there's certain things if you have a write-off in depreciation of the business, and that is actually going to reduce your taxable income, but it doesn't reduce your qualifying income with us. So a lot of times when I'm working with the accountants, I'm generally the one who's telling them, hey, all right, so they're going to file this. Well, do me a favor, cut some from here, put some within depreciation, obviously staying within guidelines and compliance. But let's make sure, because this way the client saves, let's say it's $20,000, a third of that, is about $7,000. He's saving from there. Let's keep it there, and then I can add that back in there, right? And because I see a lot of that. Now we have.
How do the 1099 guys work?
I was just going to say, so we have different programs too. If they write off a lot of stuff, we have bank statement loans, 1099 loans, P&Ls, and stuff like that. Our goal is to keep them in a standard, regular, conventional mortgage because that's going to get them the best rate, the best terms. But we have alternative avenues. If you're 1099, especially when you're a realtor, I'm doing a lot of them because the realtors are writing off the stuff. Whether it's the car, the expenses, the marketing, right? I would say almost 50% of your stuff at least is marketing, if not more. So by the time your net ROI of your income it's going to be low, right? So we're doing a lot more of the 1099, and we'll actually give the client 90% of their 1099, and that's all we need. 10% expense ratio, and we'll give 90% of it. The rate's a little bit higher, which everybody's like, oh my God, like the rate on them right now is like 8.5. So it's a little high, but I say, well, would you rather pay X amount to the big dogs, IRS, or would you rather qualify based off of this, right? So yes, nobody wants to pay an extra $100, $150 a month because your rate's a little higher, but you're also got to understand offsetting from how much you have to file maximum within tax qualifications and stuff. And then you kind of, pick your poison and see what works best. So.
99s and the self-employed always take a.
Yeah, they're tricky.
I don't. They say, "Oh, start a business." You don't realize health insurance isn't easy. Qualifying for mortgages is harder. But on the other side is, I think there's something.
The perks, 100%.
So,
Yeah.
I don't think I could look back. I mean, I don't know about you guys, but for me, it'd be a hard.
Never do it another way.
No.
Can't fire yourself.
Well, you can.
You can, actually.
You have your weird. It's a weird conversation to have.
It's like they say, you replace the 9 to 5 for the 24 hour.
Yeah.
That's exactly what
Monday to Friday, 9 to 5 to eyes open to eyes shut, Monday to Monday, as I said.
You live by that. You're an early bird. You're a
I'm-
late guy. You're everything in the middle.
I'm a 4 a.m. wake up, walk the dog, go to the gym, and then by 7.
Is the dog pissed off that you wake up at 4?
No,
most
he's
dogs
used,
are like, oh, I get to sleep till 7 or 8. Your dog's like 4 a.m. I got to get up.
he's used to it.
He's gone through the
and,
boot
yeah,
camp.
He's used to it by now. He just turned 2 like 2 months ago.
What kind of dog?
A golden retriever. So he's got all the energy in the world. So I got to walk him 3 times a day, easily, sometimes 4. So it keeps me in shape.
You haven't passed this task on to the kids yet?
No, because he's big, so he'll pull. But yeah, I mean, listen, because if I don't get in the morning my workout, by the time it's 8 o'clock, that's when everybody's firing away emails. Hey, when are we closing? Hey, why don't we have the final match CD? So,
Hold
right,
Chris.
yeah, and
Hold Chris to figure out why we don't have that.
so
Idol's always late.
I always try to get that out of the way, but I'll be honest, by like 8:30, I'm done. I'm out. Like sometimes when we'll go out for K-Chef stuff, I'm like, I gotta have some coffee before we go. Gotta try and take a nap. We're gonna stay out.
The last one, I had to leave a little early. I was donezo.
Yeah.
It's hard. So all right, cool. So you're all about making sure that everybody is. You try to find the right package for everybody so that they know what the best plan for their cost of.
Yeah, everyone's situation is going to be different, right? If a client wants a condo, right, then I need to make sure that we try to pivot them to a conventional loan, right? Because generally FHA has certain restrictions to get a condo, right? Now we do FHA single unit condo approvals where even if the association is not approved, I can actually get that specific unit approved. Okay. It is a major pain, but we've done them, and I've actually gained traction from doing them. I don't shy away from the stuff that we do. And then it's usually coordinating, with the 3 professionals and saying, all right, John, so they're looking for X. What you think? Got it. Chris, there's a lien that the buyer is going to take over and has to pay at closing, stuff like that. And then insurance is tough. Right now, we're
the tough one.
she's getting beat up extensively, right? Because if we dealt with say like 10 carriers, right, I would get 10 quotes. Now if we deal with 10 carriers, I'm getting like 2, And the other
Well,
8
some of
are
the guys have
denying
moved
it.
out in. Some of these guys have moved out in New Jersey. They're not writing in New Jersey anymore. Which
Jersey and Florida. Florida's a disaster. I was sharing her right when I walked in Cali. It's the fires in California, and then the hurricanes, and even in Jersey, the claims are outweighing what they're bringing in, which is why they're making it that much more expensive, or sending out a inspector, and they're like, hey, all right, you have to replace the roof. And you're like, replace the roof. There's still is it 10 year? What's the lifespan of a roof?
Lifespan, depending on the shingle, 20 to 30 years.
Yeah, so like 20 to 30 years. You're like, dude, we just replaced it, say less than 10 years ago. And they're like, well, no, okay.
for us to write
Yeah.
it's got to have.
If there's anything on the roof now, any kind of growth of anything, you have to replace it. And I don't know, I guess, who so important to get the right realtor. Because new home buyers think, oh, well, can't the insurance just replace that when I buy it? I'm like, that's not how this works.
No, that's not.
You know,
don't
I
tell
don't
the
know who
insurance
told
agent
you that. I have no
That's like
idea
one
who
thing,
told
don't-
you that.
But I
But,
mean, when
yeah.
you think about that, though, a lot of first-time buyers don't have a roof in the budget.
No.
Like, after they close, and I always say there's always something that's going to break as a homeowner. Hot water heater goes. You have an issue, with something. There's always something when you first move into a home, and no matter what you think the home needs more.
Yeah. Oh.
And if we ever want to have that conversation, my wife would be a great person to have on, because when we bought my new house, she says to me, and John was there as a witness, oh, Tom, this house needs nothing. Oh, really? He was blinded, John.
Yeah.
He was blinded.
I don't recall.
Wise
You're
man.
always supposed to be on my team.
Defendant Cindy here.
There you go. She's like, oh, this house is perfect. We don't need anything.
Be honest, it's a beautiful home.
It's a beautiful home. It's got a lot of. It's awesome.
Now you made it
But
your own. It's awesome.
it needed some work when we first arrived.
But you always, as soon as you start peeling the orange, right, you start
Yeah.
to see some other things. So
Yeah, and once you paint, then
Yeah.
you need this, and once you put floors in, then
Sure.
you look at that.
We did
you got
that
a little
too.
molding. Like, I mean, that's
Never
and I'll tell you, I would not have changed it. And to John's point, I love the home that he found. My wife and I, it's awesome, but there's always something. And again, I guess that's my thought is if for a first time home buyer, I'm not a first time home buyer. I've played the game, I know what's involved, but like you close, you go through Abdel's numbers, and now all of a sudden you're like, I need a roof, I need this, I need that. Siding we had a big storm and siding, ripped off my house. It's a little scary. I remember back 15, 20 years ago, whatever, when I bought my first home, it was nerve wracking. So I feel for these young guys and girls because, again, the cost of everything is so much higher than when I did it, when you did it, when you did it. So it's just not as easy to, capture that. Like,
Yeah, and I'm having these conversations with these clients. So many people want to go 20% down. I don't want to pay PMI. Why would I pay PMI and all that? And then I'm like, well, hold up. Let's go over your finances. What do you have? Accessibility to 401k, things on that nature. We have a deal closing tomorrow. The lady wanted like a super low payment, right? So she was going to take out $250,000 from her 401k. That is taxable. So
John's shaking his head.
So I'm like, that is taxable. She's going to pay, I think it was like 40% on taxes. And she goes, I didn't know I have to pay taxes. And then I'm like, yeah. I'm like, this is my recommendation is like, we want to bring your payment to X. So we're going to do this. We're going to place the offer with the agent, and we're going to ask for a $10,000 seller's concession, and we're going to do a 2-1 buy down, which is going to get her interest rate from a 6.9 to a 4.9 for the first year. And then let's say rates eventually trickle down. Who the hell knows? But that's the goal, right? We're praying. So she saved about $400. It's a smaller loan, but $400 a month every single month. And I got her to only take out $100,000 from her 401k.
But she's still going to get taxed on that money.
Yeah, she's going to get taxed, but that's where her money's coming from. But
Sure.
it's better than her going through her whole life savings, right? So it's having those extensive conversations, and that's where I say the power of a real estate agent will never go away. The power of a mortgage professional will never go away. A real mortgage professional, right? Because the industry, and you know me, I'm big on tech. I'm a big tech guy. there's still nothing beats the handshake, firm, face-to-face conversation. And I think, the big powerhouses are always trying to automate certain things. I don't think you can automate, authenticity and transparency with clients. Right?
Trust.
When you're getting an agent, a lender, whatever it might be, you're also, like we say to our buyers and sellers, you're also open to our networks, right? We know guys, you want to power wash your house, we got a guy for that. You need an HVAC company, we got a guy for that. And sometimes people find a lot of value in that.
Oh, absolutely.
I get calls, we're going to remodel our kitchen. Can you come over and let me know, like, what? And it's like, sure, I'll come over,
Yeah.
I think that there's a trust factor.
Absolutely.
And again, people also want to think about, like, should I do? They need a validation on that one. Should I do this? Shouldn't I do this? Like, this is what we're thinking. And again, at that point, you're the realtor, so you built in this trust with them over the process of working with them. And at that point, you don't have a horse in this race. So, like, you want to give them an honest perspective. But again, if they're thinking about the long term of when we go to sell this, what value is in different remodeling projects.
You guys want to make sure you hand it off to someone that's going to be with them while they own the house, and trust in an insurance agent that's going to be there to let them know the right thing to do too. With some of the small claims, like, I promise you, I'm going to tell you what's truth here. It's going to cost you, but just don't file the claim. It's going to hurt you later on.
Yeah.
And some people aren't going to get that special one-on-one FaceTime with an agent if they just call some 1-800 number.
Yeah.
For the cheapest price possible, but at the long run, it's going to hurt you.
Yeah, I think that there's a lot of value in using local professionals that know the market and sometimes you don't like their answers, but I think that, overall it gives you that personal touch. I'm a personal touch person. I always say, come into my office. If you want to see me, like, there's a lot of stuff I'm a big tech guy myself. I can text faster than almost anybody, maybe not this guy, but overall I'm pretty quick at the game. But I think that there is that value of saying, come sit down, let's put on the TV, let's throw it on a monitor and let's look at it. And, in your cases, it's come in and let's go through the numbers. Let's see it. In your cases, let me meet at the house. Let me meet at 6 other houses. And I think that that's where that value of that local pro is.
Even in title, I represent a nationwide company, right?
Mm-hmm.
But we're giving that local feel, right? So, like, I'm not in front of your clients. Like, they're not in front of the guy buying the house as much as but I'm there for you guys. And there's that support guy. So I'm very much handshake, get to know you. So when the stuff hits the fan, I'm not just a phone number. I'm not just a 1-800 number you call somebody. You're going to talk to me directly. And guess what? I'm going to find out the best person to answer your question and go forward. Maybe I am the guy. Maybe I'm not. But I'll find an answer for you in a second. I have to figure that one out real quick. But but with those face-to-face connections, with the shaking of the hands, I was almost like I was said it wrong. Shaking babies and kissing hands. So that will get you thrown out of a networking event. I know from experience. All the way around.
Realty here to work with on that one.
I'm very much the other way around, so I'll shake the hands and kiss the baby.
Yeah.
But at the end of the day, when you do have that personal connection, like I have a personal connection with Abdel right now. He's got a problem. Calls me in a second. I got a personal connection with Melanie. She had a problem. I'm hoping to have a personal connection with you. You guys have any problems or whatever? On that phone call you call like at 5 o'clock in the morning. You're not gonna be able to 1-800 number and wait till 9 o'clock in the morning and hopefully get somebody. Because I've been there. And there are title agencies that are like that too, where they'll send you right to some random person that has no idea. Like, I don't want my clients talking to a random paralegal in the background.
That's a great customer experience that you're offering to your lenders and your realtors and your insurance people. Because I think there is value in that, and the fact that, like, it's not a 9 to 5, especially in real estate. It's not a 9 to 5.
Remember when we all got into this thinking, wow, there's that open schedule. I'd love to have that open schedule. And we just go and hang out all the time.
I always say you can work any 80 hours of the week that you want.
Right? Exactly. And I left finance, which was 80 hours by Tuesday.
Yeah, that's very true. You guys are, I think, again, in my world, I'm 24/7 because I'm dealing with websites and things that go down in technology. But you guys also live in that same world where you always have to be on. Like, it's just, it doesn't, you don't know when that call's coming in or that issue's going to happen and where you don't have the clear to close.
Yeah, I mean, buyers buyers are on edge, sellers are on edge, because if they're selling, they might be buying, or if they're selling, they might be relocating. And it creates a ripple effect, right? Let's say a buyer fails to perform, which we're seeing a lot of that, right? At least not from my end, because I'm usually the one that's like, yeah, this guy doesn't qualify, buddy. The realtor's calling me, hey, and I'm like, well, this guy doesn't qualify. So, you're going to buy a house. We were explaining the debt to income ratios, right? And then, boom, they forgot that the house needs flood insurance. What are you going to do? Nothing, right? Bring more money down. I ain't got it. Get a cosigner. I don't know anybody. That's the famous line. Hey, you need a cosigner. I don't know anybody. Okay, you can't buy. Next day, hey, I found someone. So you're seeing.
So they're looking in the wrong places on day one.
You're seeing a lot of people who are failing to perform, and that's, I think, where real estate professionals become a little subconscious as to which client to go with. It becomes so much more. I tell this to our clients. So much more than just the house is listed for $500, you're going to offer $550, and another person who's offering $550 with similar terms and waiving the appraisal and limiting any contingencies. What's the difference after that, right? What's going to make the separation? And it's, in my opinion, probably going to be like, all right, not going to name names, right? But stadium lender, as I call them, or local lender, right? Who do you think John's going to likely go with? And 99% of the times, I've already called John and said, hey, buddy, what's going on? My name's Abdel. I'm a real person. And the client's been fully vetted. We've got the DU approval, the whole shebang. I can confidently get this to the closing table. We get our mortgage commitments out in 72 hours. You'll have a mortgage commitment even if we're not out of attorney review. Here you go. Please feel free to give me a call. And then I'll gauge the conversation, because if he tells me, hey, we got other offers, I'm like, what you got? And some agents are like, oh, I can't really disclose that. I'm like, so what you got? And then do we have to go $5,000 more, $10,000 more? Is it the appraisal? Is it the inspections? And I think it's kind of doing that extra advantage, right? And letting them know I can actually get this to the closing table, right? On behalf of our clients. We have a rock star team that'll be able to push everything through. I think those are the small tactics that allow us the ability to do what we do.
So you guys all agree with go local. Go with local people, not the big corporates. And again, I think when you look at like the big corporates, people think that they're brand because they have a branding budget and they do more, that they can offer you more. But really, when you peel it back, you guys, it sounds like you all are in agreement that local connection, local person, someone you can trust, a subject matter expert is.
Because when you're talking about like the day of closing, we're doing some guys moving in, some guys selling.
Oh, a lot of times the same day, right?
I can't tell you how many times, especially the summertime, I will get somebody who's the seller's already buying someplace else, right? And you can't have a 1-800 number in the background for a settlement agent. They have to get that money from their sell to their buy
to get to the new
within hours, right? Sometimes it's just educating people on how a wire works, and like that. It's not like the movies where I just send you $1 million.
What's funny is the wire is very interesting, that how it works. And when I remember the first time I was a buyer, like it didn't make sense to me. I was sitting at a closing table. Every bit of 3 hours we were waiting for. This is 20 years ago. Like I was a young kid. I mean, so but like it didn't happen right away. And they're like, oh, we're waiting on the Fed. And I'm like, well, what number are we like? But like a lot's changed in 20 years or 25 years. But it's like people don't realize that it's not just like as always as instant as maybe they're.
Yeah, right. I can sell you $20. That's fine. Probably in a matter of minutes, right? But when you start going over $10,000, now you have actual laws reporting that actually has to happen, and that's why that's to get that number. So I feel bad for your 3-hour closing. I don't think I've ever had.
Listen, it all worked out at the end. I've had a couple of weird closings over the years. That was in New York with that first one. That's the problem. But
fortunately, I got a good title company for you.
There you go.
Excellent. Those awkward closings were with me, right?
No,
ours were always like this.
Ours was super fast. Yeah. The last couple we didn't even go to. That's the best closing.
Those are the best ones.
We'll give even though Chris is here today and doing a great job, give Christina a plug. She did our closing for the Ocean Township house, and that thing was done and we didn't go. It was signed the night before. Greenberg, we worked with Greenberg. Shout out to Scott Greenberg, and he got everything taken care of for us. So
Yeah, I worked with Christina. She's one of the best in the business. So.
awesome. She's a good person.
She will get it done in a second.
So, all right, great. So I think we're just about ready to wrap up. I really do appreciate you guys coming in. I think it was great, and I hope that people really understand the value of the local professional. And I think that each of these guys brings something unique to the table. But I love the fact that they're all based on customer service. I say to my team all the time, I want to deliver a great customer experience to our clients at Wingman. And it sounds like these 4 professionals fit the same model that I try to employ at Wingman. So as we say goodbye and sign off, I want everybody to say the name, your name one more time with your website and or Instagram or Facebook so that people can find you online. Let's start ladies first.
Okay, Melanie Ciappi again with State Farm. You can find me on Instagram or Facebook, but my Instagram handle is SF Agent Melanie C. Otherwise, just Melanie Ciappi.
Chris Lynch, Chicago Title Group. You can find me online, Fedora Closer at Instagram, at the Fedora Closer, and then I'm also on Facebook too. Obviously, Chicago Commonwealth and the FNF family of companies.
I'm John from Hazelet Realty Group, 2 offices, Brick and Barnegat. You can find us on social media at Hazelet Realty Group, either on Facebook, on Instagram, and also on TikTok. And our website is hazeletrealty.com.
Abdel Khawatmi, PRMG Got Mortgages. You could find me online probably everywhere. Instagram, Facebook, YouTube, TikTok, Threads, the whole shebang. Instagram handle Got Mortgages. Yeah.
Awesome. Thank you guys again for coming in. I hope that the spring market is a huge success to everybody, and we'll be talking soon. Thank you.
Thank you. Thanks for having me.